Hey everyone, welcome back to the channel. Today, we're diving deep into the silver market, and trust me, you're going to want to hear this. We're going to dissect the latest data coming out of the Comex, and what it reveals is a situation that looks increasingly fragile. Some might even call it a ticking time bomb. So, grab your coffee, get comfortable, and let's get into the numbers. For years, many of us have suspected that something wasn't quite right with the paper silver market. We've seen massive price swings, often disconnected from the physical supply and demand fundamentals. Well, the recent reports from the Comex vaults are starting to paint a very clear picture, and it confirms many of those long-held suspicions. What we're seeing is a significant and accelerating drain of physical silver from the vaults, especially from the registered category. Now, for those who might be new to this, let's quickly break it down. Comex has two main categories of silver in its vaults: eligible and registered. Eligible silver is simply investment-grade silver that's stored in the Comex system but isn't available for delivery against a futures contract. A registered silver, on the other hand, is the metal that's fully available to back the paper contracts and can be delivered to contract holders. It's the registered category that truly represents the deliverable supply. So, what's the big deal? The big deal is that the amount of registered silver has been plummeting. We're talking about a historic drawdown. At the same time, the open interest, which is the total number of outstanding futures contracts, remains incredibly high. Think about it. You have a massive number of paper claims on a rapidly shrinking pile of actual physical metal. It's a classic setup for a potential squeeze. Let's look at the numbers from this past month. We saw millions of ounces leave the registered category. This isn't just a one-off event. It's a trend that's been accelerating over the past year. Major banks and financial institutions are pulling their metal out of the registered pile and either moving it to eligible or taking it out of the system entirely. Why would they do that? Well, it suggests they're becoming hesitant to let their physical silver be used to back the paper market. They might be anticipating higher prices, or simply don't want to risk having to deliver their metal at what they consider to be artificially low prices. This creates a serious fragility. The ratio of paper claims to physical deliverable silver is getting stretched to a breaking point. For every 1 ounce of registered silver, there are now dozens, sometimes even over 100 paper claims against it. This isn't a sustainable situation. And it's like a game of musical chairs where there are 100 players and only one chair. When the music stops, someone is going to be left without a seat, or in this case, without their silver. So who is taking all this silver? It's a mix of large institutional players, sovereign mints struggling to keep up with coin demand, and industrial users who need silver for everything from solar panels to electronics. The industrial demand for silver is robust and growing, which puts even more pressure on the available supply. Unlike gold, a huge portion of silver gets consumed and is never recycled. Every year, we use up more silver than we mine, creating a structural deficit. This deficit has been filled for years by above-ground stockpiles, but those stockpiles are clearly dwindling, as evidenced by the Comex drain. Now, what does this mean for the average investor, for people like you and me? It highlights the immense difference between holding physical silver in your hand versus owning a paper contract or an ETF that claims to be backed by silver. When you hold an ETF or a futures contract, you own a promise. You own a claim on silver. But as we're seeing, the amount of silver available to back those claims is shrinking. If there's ever a run on the bank, so to speak, where a significant number of contract holders demand physical delivery, the system could break. They simply wouldn't have enough metal to deliver. This is what's known as a force majeure event, where they could be forced to settle contracts in cash instead of metal. And what would that cash settlement be based on? The manipulated paper price at that moment, not the true market value of the physical metal, which would likely be skyrocketing in such a scenario. This is the ultimate risk for paper silver holders. You think you own silver, but what you really own is exposure to the paper price. And in a crisis, you might be left with devalued currency, while physical holders watch the value of their assets soar. The fragility of the Comex isn't just a theory anymore. The data is screaming it at us. The decreasing registered inventory, combined with massive open interest and strong physical demand, is a recipe for a major price dislocation. It suggests that the paper market's ability to control and suppress the price of silver is weakening. Every ounce that leaves the registered category is one less ounce they can use to manage the price. They are losing control of the physical market. So, what's the endgame here? It's hard to predict the exact timing, but the trajectory is clear. At some point, the paper market will lose credibility. The disconnect between the paper price and the price for real, physical silver will become too great to ignore. We could see a day where the Comex has to halt trading or declare force majeure because it simply cannot deliver on its promises. When that day comes, the true price discovery for silver will happen in the physical market, and it will likely be at a level far higher than what we see today. This isn't about fear-mongering. It's about risk management and understanding the mechanics of the market you're invested in. The signs are there for anyone willing to look. The ongoing drain of physical silver from the world's most important futures exchange is arguably the most bullish signal for silver we've seen in decades. It tells us that the smart money is moving to secure the real asset, leaving the paper promises behind. For anyone considering an investment in precious metals, this should be a major wake-up call. Ask yourself, do you want to own the promise, or do you want to own the metal? The current situation in the Comex silver market makes that choice clearer than ever. The foundation is cracking, and it might be wise to make sure your wealth is built on solid ground. Thanks so much for watching today. This is a topic we'll be following very closely in the coming weeks and months, as it's one of the most important stories in finance right now. If you found this analysis helpful, please hit that like button and be sure to subscribe so you don't miss our future updates. Drop a comment below and let me know your thoughts on the Comex situation. Are we on the verge of a silver squeeze? I'd love to hear what you think. Until next time, stay safe and invest wisely.